Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and excited to be joining you on a Monday morning because I have quite a panel lined up today to cover some of the recent news from Fortuna Silver. Fortuna did have their first quarter earnings out last week, and we're going to be going over that, as well as the recent Chesser Resources acquisition that Fortuna did. Also going to be digging into the Seguela Gold Project and the latest updates there, as we are now nearing first gold pour coming up towards the end of the month. So a lot happening, a lot to dig into. This is a live call, and if you do have questions, you're welcome to type those into the chat. We'll be happy to discuss those as well. And fortunately, joining me today is Jorge Ganoza, the CEO of Fortuna Silver, and he'll have plenty to talk about, especially the earnings and the recent developments. We also have Paul Whedon joining us from South Africa to talk about his baby that's going into action, as well as the new project that they have there. And on the analyst side, joining me is Adrian Day of Adrian Day Asset Management. First time we've had the pleasure of having Adrian on the show, but great to have him here, as well as Dave Kranzler and everybody joining us at home. So with that said, we'll dig right into it. And Jorge, great to have you back on the show today, and nice to see you. And perhaps you could start by walking us through the latest results that you guys came back with in the first quarter.
Yeah, thank you, Chris, once again for the opportunity to speak to your audience and share some of the highlights of recent developments for the company, right? So with the quarter end, we had a strong quarter. And let me put things into perspective, right? We've been seeing a significant margin compression for the entire mining sector over the last couple of years. Inflation is a topical issue, not just across mining, but, households, other industries. Everybody's dealing with the pressures that inflation brings upon us. And, costs for the, 2 years ago, average all-in sustaining cost, according to the World Gold Council for the mining industry, 50% of global mine supply came in at an all-in sustaining cost of around $1,000 2 years ago. Today, that's closer to $1,300, right? All-in sustaining. So, and 2 years ago, we were selling gold essentially at the same price we were selling gold now 2 years later. And silver, even lower. No, I think compared to 2 years ago, silver is down around 14% quarter over quarter, comparing, where prices were in 2021 to Q1 2021 to where they are today. So, in spite of all of that margin compression, we still show a resilient business, a business that can generate net income of, adjusted net income of 5 cents per share. Without adjustments, we came in at 4 cents per share. Our adjusted EBITDA came in at $65 million. And our operations provided net cash of around $42 million. And after paying close to $13 million in taxes, funding or corporate expenses, we generated free cash flow from operations of $8.5–9 million. That's not a figure that a lot of our peers provide, but we do, and that is just a true measure of free cash available after funding all sorts of commitments from ongoing operations, right? That was a healthy $8.5 million. And again, usually the first quarter of the year is burdened with all our tax payments in the different jurisdictions where we operate, right? So, and at the end of the period, we end up with close to $130 million in liquidity available. So we are well cashed up to face all our capital demands. For the end of the quarter, also, we put out two significant news. One is that the Seguela Gold Pour is imminent in the month of May, and we are running into the last week of May. We have some 10 days remaining, 9 days remaining in the month. So you know, we're going to be seeing the first Seguela Gold Pour in the coming days. And also we announced an exciting addition to our exploration development pipeline in West Africa, which is the Chesser acquisition. And here Paul, our Senior Vice President of Exploration, can expand on that in a moment. But those are the highlights. A business that, in spite of all this margin compression, continues to you know, be resilient, continues to generate, you know, healthy cash, and I expect even a stronger second quarter with, you know, a bit of relief that we have seen in prices. You know, like prices, we sold gold at an average of $1,880 in the first quarter, silver closer to $22, and for the second quarter we expect higher prices. No, so some relief there for sure.
Okay, and Jorge, one of the things that obviously we've talked about in the last couple of calls, and you mentioned again today, is that with the inflation, you have had costs going up. I'm curious, have you seen any mitigation of that? At least the reported numbers we get show that some of the worst of the spike in inflation slowing down a little bit. Has that come through to any of the costs? Have things, at least the increases, slowed down a little bit, or how is that looking so far?
There are two angles to that. One is what we can control, and we've been implementing across our operations measures to you know, optimize our operations and mitigate the impact or the pinch of inflation by just making our business leaner, meaner, and we can speak to some of those initiatives, like optimizing use of cyanide, optimizing haulage in our pits, and things like that. And yes, on more of the external front, we have seen, and this varies from jurisdiction to jurisdiction, but as a general theme, into the first quarter, we've seen inflationary pressures ease compared to what we saw last year, for sure.
Okay, well, that's certainly good to hear. And like you mentioned, hopefully the higher gold and silver prices will have a nice impact going forward. Paul, would you like to offer any comment? And we'll come back to the earnings and take questions as they come in. But Paul, would you like to take it from there and talk about the recent Chesser deal?
Yeah, sure, Chris. Thank you for that. You look, the Chesser deal is one which we've been following for a couple of years now. It's an emerging project in Senegal. It's located in the heart of the KKI province, which is probably the second largest gold producing province in the greater West African area. So we think it's got great credentials from that side of things. Small Australian junior. It's at a similar stage to where we acquired Seguela 4 years ago. They're probably a little bit further down the path than where we were when we acquired Seguela. But yeah, you know, scoping studies out. They've got a great team on the ground, great geology. Senegal's a great country to operate in and to do business in. So we'd see that one moving through. We see the exploration potential as being quite substantial there. They've got several anomalies and prospects that are walk up and drill ready today. And so we'll be pursuing those fairly quickly, but we'll also be just reconsidering exactly how this project is going to be configured. You know, again, the copybook for us, or the playbook for us, is how do we push Seguela through over 4 years? And we'll be taking the same approach through the Chesser acquisition. And you know, how do we make that move ahead? And you know, you can see the graphic on the screen there. There's just some of the prospects that they've identified, and you know, we've worked closely with their guys in understanding these, and we'll continue to do so over the coming few months. So yeah, really looking forward to, once the deal closes in late August, early September, getting the guys on the ground and you know, taking the ownership that's there. And yeah, you know, their team on the ground is very capable, and we're looking forward to working with their guys and just helping move this project forward over the next 12 months or so.
And Paul, I know this is a project that you and Jorge have been following for a couple of years now. This wasn't something that just recently came on the radar. Obviously, you're over in West Africa, and perhaps you could just fill us in a little bit of the background on how long you've been looking at it and what drew you to it.
Yeah, so Chessa sort of came onto the radar for us probably about 2.5, 3 years ago. There was a spate of junior companies, mainly Australian companies, who were exploring in that area, and these were one of the guys, and they were successful. And yeah, we've watched it grow and mature over the last 2.5, 3 years to the point where it is today, and they've de-risked a lot of the project. I think it's in that sweet spot where they require additional funding to move it forwards. We've certainly got the capacity to provide that funding. We've got a team that's almost finished building Seguela. We'll be looking at that, wrapping up imminently, so that we can apply that skill set in that team to the Diamba Sud project. So yeah, so it meets a lot of our criteria. It's very simple. It's an adjunct to what we're currently doing in Burkina Faso, what we're currently doing in Côte d'Ivoire. So it's a third country in a francophone space. We're very comfortable in that space. Geologically, it's very, very attractive, and you can see that we are within sight of a couple of truly tier 1 deposits that Barrick has there, with Lulo and Gunkoto. They're 12, 14 kilometers away, or sitting on the same structures. A little further south, you got B2 Gold's Fekola project. These are all multi-million ounce open cut and progressively underground deposits. We're on the same structure. We're in the same sort of lithology, same sort of rocks. And again, for me, it's what is the geology going to tell me? And do I see the potential? And I certainly see potential coming out of Diamba Sud. And then further afield, Chessa admits themselves they were a small junior company, and they really hadn't had the capacity to do more regional exploration on their other properties. And you can see on there Diamba Nord and Murichu and Bondala. And so we'll be looking to bring those on stream as well and do the generative exploration that we enjoy doing. And hopefully we can see further success coming through there as well. So yeah, it's been a great little project for us.
Yeah, and one of the questions that I've heard a few other people ask as well, is what was it that Chessa led them to be willing to sell? Obviously, you also do have some of these larger partners in the area. So part 2 of that, was this just too small for some of these companies like Barrick in there? And what enabled you to get this project at this particular time?
I think there's a few parts to that, Chris. I think the first one is just geography. You got to recognize that we're in Senegal. Barrick's major operations are over the border in Mali. So, anyone who's trying to think about moving stuff across the border, it's going to be difficult to negotiate with the governments. So I think you have a natural geographic boundary there. Is it too small? I would suspect it probably is. I mean, Barrick is the second largest, so they have some pretty high hurdles to step over. So they're actively engaged with exploration immediately adjacent to Diamba Sud, literally on the lease boundary. So looking forward to getting to know them a bit better. But no, they're not actively looking to sort of dominate Senegal, if you like. B2 Gold, they're busy with their activities down around Fekola itself, and then further afield. They recently, or late last year, they acquired Oklo, another Australian junior, also in Mali. So I think they're quite busy with their stuff. And then also more recently, you had Managem acquire the Boto assets from IAMGOLD. So those guys are going to have their hands full as well. So it's certainly a busy area. And yeah, so I think that's sort of why we're attracted to it. And then,
if you allow me to add to what Paul is sharing and put it in a bit more on the strategic frame of mind that we have with respect to our business development in West Africa. In the region, you see very actively the senior producers, right? Or companies that have graduated into the ranks of senior producers, or Barrick, IAMGOLD, Endeavor Mining, B2 Gold, Anglo, Newmont, Kinross. I mean, you see a lot of the larger producers, which are looking for, at least I would say 250,000 ounces a year annual production with 5 million ounce plus in reserves, at least. And then you have the single asset developers, the explorers, and in the middle, there is a gap, we believe, where mid-sized producers, companies, producing 500,000 ounces a year, companies for which, let's say, 150,000 ounces of annual production still moves the needle. There is a less competitive environment there for those type of assets. So we, and we like West Africa for that. This competition for, assets that can produce 150,000 ounces annually is not a competitive space. No, we have a couple of companies, 2-3 companies, where in other jurisdictions in the world, you would see that as a much more crowded space, right? So we can take advantage of that, and the Chesser ground sits at the heart of one of the most productive gold belts in West Africa, and our ability to make this acquisition, I believe, represents a strong value proposition for the Chesser shareholders. Chesser and Fortuna. Chesser struggled in a difficult market to continue funding the development of a project, right? And I think this is a great opportunity for both companies to come together and advance what we believe is a very exciting project.
Okay, and that helps to expand your presence in West Africa, pretty close to where the Seguela project is about to get up and running. And with that said, Adrian, I'd love to pass it over to you. And if you have any questions that you'd like to run by Paul or Jorge, and we can take it from there.
Well, I guess, the largest question would be, standing back on a big strategic view of the company. It wasn't so long ago that you were exclusively Latin America and primarily silver. Now, of course, you're split between Latin America and West Africa, but you're primarily gold. And I'm just wondering, if you look ahead at your next acquisition, the acquisition after that, would you be specifically trying to redress the balance, or are you more looking at an asset as an asset? If it's a good asset, it's a good asset, whether it's in Peru or in Burkina Faso. In other words, do you mind that the West Africa is now dominating the company?
No, I think you answered the question there with what we're looking for is at assets, be it in silver or gold, that can perform throughout the precious metals price cycle. So assets that tick our investment criteria on life of reserves, on annual production, on opportunity to generate healthy margins for the business, healthy internal rates of return. So be it in silver or gold. Now, we treat the 5 countries, 2 continents, 6 countries now with Chesser where we operate as we have established centers, management hubs in Abidjan, in the Ivory Coast. From there, we have the structure and infrastructure and management teams to manage the West African business. And for LATAM, that hub is in Lima, Peru. So from those 2 hubs, we'll continue to run our business and seek opportunities as well. Now, the priorities for continued growth are the countries where we operate. That's priority number 1. And priority number 2 is near neighbors. Near neighbors. And Senegal falls within that category of a near neighbor. And Paul pointed this out. Senegal is Francophone. Senegal is, we can run that business with the existing infrastructure we have in the Ivory Coast, right? So that's how we view it. We, in essence, become agnostic, be it silver or gold. It just has to be a good, solid asset. And long term, Adrian, strategically, we're committed to both regions. Now, I would say that tactically, we are going to be allocating capital where we can get our projects ahead easier, where we see more opportunity at a given time. So that's important, right? So tactically, you will see us allocate capital more on a short-term basis, but within the regions where we operate. Strategically, we're comfortable with all those 5, 6 countries where we currently are, long-term. Short-term, Burkina Faso, for example, there is a security concern in Burkina Faso, undoubtedly. So today, we're looking to maintain our mine operation in Burkina Faso, but we're not looking to expand our presence in new projects in Burkina Faso. No, long term, we believe Burkina will overcome its troubles, but until we see clear signs that that is happening, we're not willing to commit geologists on the field or funding to that endeavor. I would say the same in Argentina. We're committed to the long-term development of our business in the province of Salta, but until we see some clear change, like we saw back in 2016, back in 2015, on the macroeconomic front, we're not going to be committing capital to Argentina at this stage, right? You know, we look for opportunities, we become opportunistic, but the real focus for Paul and his team is more tactically allocated to places where we can advance our business. As a general theme, we're more focused on organic growth, and we will take an opportunistic approach towards things like Chesser, which is not a big financial commitment nor a large corporate transaction, but we believe has high value as an opportunity. It's still with some geologic risk, but we believe we are comfortable taking those risks, all right? We're comfortable taking geologic risk.
Okay. You didn't mention Mexico there. What are your current thoughts on Mexico? Because there's been a lot going on there.
You know, Mexico is an evolving story right now, and unfortunately, leaning towards a more difficult place. And it's interesting you ask that question now, because Paul and I were having this chat about an hour, 2 hours ago. You know, Mexico just enacted a new mining law. No, they passed the bill. It makes it more challenging for the business. And the current administration there's no secret that it's adverse to mining. No, that's no secret. They openly say that they're not going to issue more mining concessions, and they went from saying it to enacting it in a law. No, now mineral exploration in open ground is reserved for the state, for the government. They have put in place a lot of new measures that are anti-technical. For example, what is the most capital-intensive phase of mining? Well, when you're building a mine. And that's when your banks ask for collateral and guarantees for the loans that we use to build those mines. Well, the Mexican government is saying that you cannot use mining concessions as collateral with the banks unless the concession is in production. There is production coming out of it, but that is anti-technical, really nonsensical, because when the mine is in production, you probably don't need that much collateral. The problem is when you have to build the mine and develop it. That's when the business becomes capital intensive and the banks demand the guarantees. And the Mexican law would not allow you now to use your mining concession as a guarantee, which is what you have, right? Is a mineral resource as a guarantee. The general theme of the law just provides for less legal certainty on a lot of aspects. So it's unfortunate. I believe that this new bill is going to be contested in the courts. I think we'll see a large amount of claims filed with the Constitutional Tribunal in Mexico, challenging the law. But uncertain times for sure, right? Mexico is a country with a long and proud mining tradition, and this administration is adverse to mining, right? And I believe that's a mistake. Mining is really an ally for any developing nation, because we advance our businesses in remote places where it's very difficult for the state to get with infrastructure, opportunity, and that's what mining does, right? We don't work in an industrial park a couple kilometers outside downtown. We work in quite remote areas. We provide quality employment, develop infrastructure, work with the communities in areas where the state, usually states in developing nations, don't get to. It's difficult for them. So I think we also need to do a better job communicating all of that with the current Mexican administration. But we are assessing our future in Mexico for sure. We're assessing it.
And Jorge, before we turn it over to Dave, perhaps this would be a good time to address the recent situation you had at the San Jose mine in Mexico, where there was that legal blockade that fortunately you guys were able to get resolved quickly. But anything you'd like to comment on that?
Yeah, no, that was the result of dispute. I would use the word dispute or friction with the workforce with respect to profit sharing, right? In Mexico, profit sharing is by law. 10% of profits at the sub-level have to be shared with the workforce, and that's something we've been doing very promptly for a decade, over a decade. But now, we were talking about margin compressions and less profitability coming out of the mines. Well, that happened this year, and the workforce was, complaining of less profits out of the mine compared to the previous years, and that led to a blockade. I call it a blockade and not a strike, because this was illegal, right? There is a procedure to go in a strike that was not followed here. So it was unfortunate, but resolved, no? And we're back to work, and the issue was resolved, addressed, and all of our interests, the workforce, the company's interests, over these 15 days just got aligned, because they were disaligned, and over this period of time we were able to align everybody's interest, and that is to have the mine producing for the benefit of all, right?
Well, and I think that's one of the things that people who watch the show and follow Fortuna have appreciated, where these situations do come up. But similar with the permitting situation, you've done a good job of getting these things resolved and handling them and working through them, which obviously an important step of the process. So good to hear that has been resolved there. And Dave, I'll hand it over to you now. I'm guessing you have some questions today for Paul and Jorge, so I'll let you take it.
Nah, I'm good. First, I just want to say congrats on the Chesser acquisition. It looks like a great opportunity. As you say, it looks like it's potentially a high value acquisition. I was wondering if you could just kind of conceptually give us your vision for what an eventual mine would look like. For instance, is your goal 1 million ounces, 10-year life of mine, 100,000 ounces per year, that type of thing? And I know you don't know until you get more exploration under your belt, but if you could maybe just put some conceptual numbers on what you think it could be? And then the second question is, are you still actively looking for more acquisitions in West Africa, or do you need to digest Chesser first before you take on another project?
Yes. With respect to the first question, I can tell you what our thresholds are, right? Paul can elaborate on what we think it can become, but we need to see an operation before we go into developing a new mine. We need to see a horizon of 10 years plus. No, we need to see that. That does not really mean that we need to have the 10 years in a reserve inventory at any given moment, but we ourselves internally need to see it with a lot of clarity, and that is 10 years plus. So for us, a mine that moves the needle needs to be at least in the range of 120,000 ounces annually, right? At the very least, with all-in sustaining costs below the industry median, which today would be, $1,200, $1,100 or less, all-in sustaining. Conventional. We don't like to get involved in things that need breakthrough technologies nor anything like that. So, exploration opportunities in the package would add value to or decision to get involved in something. So, internal rate of return. Well, at the end of the day, we want to see those returns in the high teens, low 20s at the very least, right? For a mining venture, that's at least what you would demand, right? Low to mid 20s would be very good, right? But yeah, we work with all those variables, right? We work with all those variables. Not necessarily all the assets tick all the boxes, but we have to feel very comfortable with all of those, right? I think I'll let Paul speak to this, but we have a high conviction at this stage that we can push the sub-million ounce resource at Chesser beyond those hurdles.
Yeah, I mean, to follow on from what Jorge is describing here, one of the big attractions for us is that we can see, we believe, some pretty clear pathways to getting to that million ounce mark. There's a combination of converting some of the remaining inferred that's there, as well as walk-up targets that are drill ready now. Chesser a month ago was releasing some good results, some more encouraging results from areas. None of this is in the resource plan as yet, so I'm pretty confident that we can see a pathway over the next couple of years to the million ounces or more. And as Jorge was saying, we're looking for that 10 plus years of mine life. And if you look across the portfolio now with Seguela coming on stream, we've got Lindero's long life, Kayoma's got a long life. As a company, our resource base is expanding out to that nearly a decade. And I think that's the key thing for us here. It allows us the opportunity to, as an exploration guy, it gives me time to actually think through and digest how these things need to work. And we do drill quickly and we drill rapidly for these things. But it allows me time to get on there and do a proper job of exploring. There's nothing worse than having to be chased around the countryside because the mill's very hungry. So, I keep pointing to Seguela as the textbook of how we think we're going to run these things.
And a key concern for a mining company, for a mining investor, is the ability that mining companies have or don't have to return to shareholders. No, and the issue is that if you're running mines with 5-year life of mines, and that's what makes up your portfolio, it's very difficult to return to shareholders. Very difficult. For me, return to shareholders needs to meet 2 criteria. One, it needs to be sustainable. And second, it needs to be meaningful. And it's very difficult to achieve those two basic marks, sustainability, predictability, and be meaningful if your business is running out in 4 years, 5 years. No, it's very difficult. And it becomes dilutive, right? So it's not that you are impaired in returning to shareholders. You are having to probably issue shares and do raises and go into dilutive transactions in order to continue providing life of reserve. So what we are trying to do is put together a portfolio of assets that where we can project our business for over a decade, at least, no? And today we have 5 assets in the portfolio. I will not count Chesser yet because that transaction needs to close. But we have 5 assets in the portfolio, and of the 5, 3 have 10 years plus. So it's a construction we're doing. You don't build that from overnight. That's something that we've been working on, and I'm not sure the market investors fully recognize that. We still have 2 mines with short life of mines where we're continuing investing. But not all of your mines are always going to tick all the boxes, as I say. But out of 5, 3 are there, and we see opportunity in the Chesser transaction to get there in a very accretive way. We have given up 5% of the company pro forma for an asset that can bring 15-20% of the ounces to the company. So with a bit of drill with the luck with the drill bit. So we're willing to take that gamble. It's as a mining company, that's our leverage or knowledge, and that's what we're willing to take gambles on that front, right?
Dave, did you have any other questions out on there?
Oh, as a follow-up to the last one, are you still actively looking at more acquisitions, particularly in West Africa, or do you need to digest Chesser first before you take on another project?
Yeah, the answer is in West Africa, we will be, we are keeping an eye open, David. We're keeping an eye open. If you look at our budgets, our exploration budgets, they are very much focused on the existing portfolio, and we keep an eye for Chesser-like opportunities. I think if you see Fortuna transacting again, it will be something probably similar to Chesser. We're not looking for large corporate transactions at this stage. That doesn't fit in our strategic map right now, or strategic vision for the company in the short, medium term. We don't believe we need that. We are always with the eyes open for high value exploration, near-term development opportunities. And so you could see us transact again on something similar to Chesser of that nature. Yes, something that probably bears higher geologic risk and less financial risk to the company, right?
Okay, and Paul, I was wondering if you could give us an update on how things are coming along at Seguela. We talked a little bit before we hit the record button that it's really gone pretty well and on track, not too many deviations from the plan. And obviously you've done this before, so perhaps you could fill people in on how that whole process came along and where things stand now.
Yeah, certainly, Chris. I mean, Seguela has the 4 years that we've had it, it's had a strong track record now of the pipeline delivering for me. We've had three deposits, NCN, Cooler, and now Sunbird come through in those 4 years. We've got a really, really strong pipeline of new prospects. We've got one we're drilling on at the moment at Badior. So we've got Badior, Barana, and Kestrel, which we talked about in Q4 last year. They're all new for us. Sunbird has taken up a lot of our activity for the last 3 months while we infill that and lift it up to reserve status. But the rigs have moved back out onto the other prospects. So again, that pipeline is delivering for me. And running in parallel with that, we've got another, well, we stopped counting when we get to 30. We've got more than 30 prospects that we've generated that are yet to be drill tested. And I like to keep that sort of number sitting there. We keep ticking over new ones all the time. So the process is going about really quite methodically. And the next phase you'll start to see us talk more about over the coming 12 months or so is what is the potential for underground. And we've got high-grade pits at Ancien, at Cooler, at Sunbird. They've got some very high-grade shoots that are open at depth. And so we haven't tested those. Now the focus has been on delivering ounces for the open cut. That has now been done. And so the transition will also be, can we bring the underground on stream next? So you'll see that exploration approach running through from target generation through to infill and then extension into underground. And just rinse, wash, repeat. That's how we see this one working out.
Okay, and Jorge, I know something that you've mentioned as well is that when people ask you what comes after Seguela, and you've said more Seguela, I know you're excited about the drilling that you've been doing and some of the untested areas that you have to be looking at, and perhaps you could give us your thoughts on Seguela going forward. And you're muted right now, sir.
Yes. No, I reiterate that I say, no, what comes after Seguela? Well, more Seguela. The plan here is Paul's drill rigs have been infilling the Sunbird discovery for the first half of the year. We have 750,000 ounces there between indicated and inferred that we expect to convert to reserves with this good work that has been done. So that's information that is going to feed our mine plans this second half of the year 2023. And his drill rigs now are moving to other exploration targets in the greater Seguela land package. So at the same time, in this second half of the year, we're going to be testing the limits of the plant that is operating now. No, the Seguela plant is operating daily on a 24/7 by now. That's why we believe first gold is imminent any day. So, but with all of that information, the testing and pushing the limits of the current design of the processing plant, the second half of the year, this new geologic information, it will feed our assessment for how big should Seguela really be in light of the additional resources and with the knowledge of the limits of the facility that we have built, right? So early next year, we should be making a decision regarding the potential expansion of that plant, where we're going to always try to optimize the size of the processing infrastructure to the size of the reserves and resources available for mining. So that work will take place through the second half of the year into early next year. So we are gearing for that. Everybody is aligned on that, and the general thinking for the group is that based on the information available, this mine right now deserves to be bigger, right? The question is how big, right? And that's something that we need to figure out in the coming months, and that is going to keep us busy there for sure.
Okay. And Adrian, did you have any other questions that you would like to run by today?
Yeah, I'd like to ask a question. You must have thought of it yourself. I thought of it. You've just completed Seguela on time, on budget. And as we know, that's not necessarily, shall we say, a universal experience among new mine builds. You've had this isn't unique to you. You've had a very good track record of building mines and building expansions on time and on budget, notwithstanding Lindero. You've got very solid management. You've got a clear strategic vision. You've got some very good mines that are throwing off good cash. What have I missed there? And yet your stock is remarkably inexpensive compared with, your peer group of gold and silver mid-tiers. I'm looking at Bloomberg. I don't know if the numbers are accurate, but they're showing price to cash flow at less than 5 times and price to book at only 80%. But we know your stock is cheap. What are the reasons? You must have reflected. Why is your stock so cheap? I mean, I like cheap stocks. This is not a criticism. I love cheap stocks because I like everything about the company, and I like the fact that the stock's cheap. But what are the reasons, do you think?
Yeah, no, I think we had a tortuous path since the announcement of the Roxgold acquisition. No, that's back in April 2021. No, so it's been a tortuous path, in spite of the fact that the construction of Seguela has been delivered. So, I think there were legitimate concerns on the part of investors back in April 2021 and the following months with the transaction. Legitimate concerns on our, ability to integrate successfully a West African business and, tackle that challenge successfully. So it's been sweet and sour for us, because as we've been advancing and through the integration, the construction decision on Seguela's successful build, where we've been gaining trust month after month throughout a year and a half of construction, right? The market was always, concerned, and this all through a difficult market, right? And Mexico has been a problem child in the portfolio. First, although Mexico, it's probably around 20% of our NAV today, no more than that. It's been creating a lot of noise. So on one hand, we've been advancing successfully the integration, the delivery of Seguela, which is a flagship asset. We have had noise along the way popping up in Mexico with the permit. No, the issue with the extension of the regional permit in Mexico came in October, November 2021. It's something that we solved. The mine never lost a day of production, but still it was very noisy, right? So I think that in a market where the investors had been largely risk averse, one, we went into a construction. That the construction went well, but the market, I know peer companies that postponed constructions because they didn't want to build in a market where investors hated constructions. No, I know peer companies, IAM Gold to mention one, that decided to postpone construction because investors had no appetite to take on the risk of a construction, right? And we did so, and we done really well. And we could not have done that without a successful integration. So all of those things tied together. But along the path, our problem child in Mexico, the San Jose mine, unfortunately, which has been a phenomenal asset for us, a tremendous cash flow generator over the last couple of years, has been a source of noise for the business, right? And again, we never lost a day of production. Never lost a day of production. That mine still remains a significant free cash flow contributor to the business. But, I think all of that has played a role in impacting performance. And, we have to focus on what we can control, and that is running our mines efficiently, generating cash, being strategic regarding what businesses we get involved with, I believe that we had a good quarter. I think the response for the market in a dismal day was good. If you look at how Fortuna performed on the announcement of our Q1 results. For Q2, we're going to start seeing the input of Seguela in our numbers. And that input is going to start growing. For the second half of the year, we expect between 60 and 75,000 ounces of gold out of Seguela. more importantly, at an all-in sustaining cost in the range of $1,000 per ounce. So all of that is going to start coming in, and it is my expectation that, I mean, you cannot get disaligned for too long, and numbers will support and speak for themselves. I agree that we're currently being deeply discounted on multiples on cash flow and EBITDA, and undoubtedly with mines that have, you know, good life of reserves, are predictable. So I believe that should get realigned. No, they cannot be disaligned for too long. So I can still see some investors saying, show me a good quarter for Seguela, right? Show me a good quarter for Seguela. Perhaps after we have a good 1 or 2 quarters with Seguela, perhaps it's too late. I don't know that. You guys are more savvy investors than I am, probably, but that's where we're gearing the business, no? I mean, I can tell you that Fortuna has never been as strong as it is today, because the quality of people, the diverse teams and experience, the quality of assets in the portfolio, the exploration pipeline that we're putting together, the jurisdictions, our world-class jurisdictions where we're based for our business. So, you know, we might be out of favor for a while, but numbers are numbers, right? You cannot defeat math for too long, right?
No, great answer. Thank you.
All right. And Dave, did you have any final questions before we wrap up today?
No, I don't actually.
All right. Well, a lot that we covered there. And I guess, Paul, did you have any final thoughts or anything that we should know about that perhaps we didn't talk about today yet?
No, I think we've covered all the key points there, Chris. And yeah, looking forward to reporting back on both the Seguela Gold Pour and just the progress at Chesa.
Okay, well, again, congratulations. I know that's quite a project that you undertook, and must feel nice. How does it feel as you're seeing the construction completed? And I'm sure it's gone by quickly. How does it feel to be at the end of that process?
A little bit sad in some ways, because there's a certain level of excitement when you're building a new plant, but at the same time, it's an awesome milestone certainly for the exploration team, because they get to see 4.5 years worth of hard work coming to fruition, and you know, they'll get to hold the gold bar in the next few days. So you know, that to me is a huge relief for those guys, and it's always an amazing experience to be part of a new build, especially when you've been part of it since the beginning. So yeah, a little bit exciting, a little bit wistful, because we're going to move through this phase of excitement onto something else.
I do have one quick question. Who gets to keep the first gold bar?
That's the decision I'll have to leave to Jorge.
We're gonna sell that one very quickly.
Good. I like that answer as a shareholder.
And Jorge, any thoughts for you on terms of finishing the construction here? Again, been a long process, although it seems like it's gone by rather quickly, and really congratulations on keeping things on time and on budget. How does it feel that as you're coming towards the end of that process?
I'll just make a comment here that ties to all of this. You know, I am usually the you know, communicating the company is my responsibility, and one that I cannot delegate. But really, Fortuna is made up by over 5,500 people today, making this company happen every day. And I cannot stress enough the quality, the commitment of the workforce and the leadership within the company that I have the luxury to work with, right? We have diverse teams with diverse experiences, you know, Canadian engineers, geologists, Australian engineers, geologists, Peruvian, Argentinian, Mexican, Colombian, African, from the UK, diverse teams coming together and working well. I'm just like to reflect on that because we see the pictures and everything, but there is a lot of people working every day doing great job to make this happen, right? And just delivering this mine is a tribute to all of them. I think the Seguela team has done a great job, but also all of that has been supported by the rest, right? So it's a great team effort. And I just enjoy that very much, that part of the business, right?
Well, and congratulations to you for really connecting and bringing these people together. You have a strong vision of your company that really comes through every time you come on the show or do the other calls that you do. And I think people understand what you stand for and what you're aiming to accomplish and get that message out there clearly. So I think that goes a long way. And again, congratulations to you and everyone at the company on the Chesser deal and also getting Seguela up and running. I know Dave and I are excited to be there just a little bit over a month. So it'd be great to see you again in person. And just in wrapping up, if people do have any questions, you can go to fortunasilver.com and go to the contact tab. Obviously, a lot of information on the site. And also, of course, would like to thank Adrian. Great to have you on the show today. I appreciate you joining us. And people can find out more about you and your services at adriandayassetmanagement.com. And Adrian, anything you'd like to mention there before we wrap up?
No, thank you. I thank you for asking me on, and it was a pleasure.
Well, sure appreciate all that you do, and have been a fan of some of your research for a long time. So great to finally have you on here. And lastly, of course, Dave Kranzler of Investment Research Dynamics. Dave, thanks for joining us as always, and good to see you again. And we'll look forward to seeing you in just over a month. And with that said, we're going to wrap up for today, but appreciate everyone at home joining us, watching the call, and finding out a little bit more about latest progress and success at Fortuna. And that said, we're going to wrap up, but hope everybody has a great rest of your day. And Paul and Jorge, thank you for joining us as well, and congratulations. And we'll look forward to talking with you again soon.
Thank you.
Thanks, guys.
All righty, and we are clear. So